Hey there, folks. Happy Saturday to you. I hope you're having a fantastic weekend. You had a great week trading. Getting a little bit of a late start than I typically do for the market wrap video this week. What can I say? It is NFL draft season. Got a buddy in town doing some draft parties and all that kind of stuff. And as a Cleveland Browns fan, well, I've got an awful lot of draft to watch. So, getting a little bit of a late start, but there is an awful lot to talk about. So let's go ahead and get right into it. So, a couple of things happened this week that can be some caution flags. The first thing I want to talk about here, starting out with the strength of the dollar. Now, we've been talking about the strength of the dollar for a while now, and part of the reason why we are seeing such strength in oil and in commodities, gold, miners, is because of the weakness of the dollar. And we actually gapped down a bit on the dollar on Friday. So, we can attribute this to the Fed, which, did nothing basically at the meeting this week, remained fairly dovish, and the dollar continued to weaken off of that. Now this can change in a heartbeat. I mean, Bank of Japan also, pulled the shocker this week, which was actually a good reason as to why the dollar weakened even further. So, what I'm showing you this chart. Normally, I have a cleaner chart when I do these videos, but this one has the Bollinger Band on it. And what I want you to notice is that the dollar dropped completely out of the Bollinger Band. Now, notice back here when it did the same type of thing, you had then a 1, 2, 3, 4, 5 day move to the upside. Okay? So it wouldn't be a big shocker for me if we were to see maybe some type of a red to green move in the strength of the dollar next week. And if that happens, then maybe we could look for oil and gold and the miners to have a bit of a pullback. Okay. We may, I mean, look, it's not uncommon that if you look here, it has been out of the lower Bollinger Band, had 1 day bounce, and then boom, dropped again. So we'll see if the weakness in the dollar continues. It did break an area of fairly significant potential support. So that is something to keep an eye on really closely to next week. So let's go to one of our setups that we were really kind of hoping would play out this week because it had such a sweet looking chart, and that was the IBB. We were looking for the biotech sector to potentially take out 289 and head up into the 300 range and up into this trend line here and potentially test. And we were looking pretty good. We were bouncing in between here. Everything was looking great. And then Friday, we broke this area of support, and that is a bit concerning. And we did it on some rising volume. So the IBB, Gilead didn't help. We got some big earnings this week, and it really didn't, shore up the biotech sector. So that's a bit concerning. Let's take a look at another area of potential concern. Actually, there's several of them, right? The IWM, which has had an amazing run, right? Started to see some weakness. So what we saw on Thursday and Friday was some pretty good breadth of some weakness in the markets. Now, granted, we were coming into the end of a month, right? Starting a new month. So you've got some hedge funds that are locking in some profits and stuff like that. But let's be realistic. Fundamentally, we have not been solid. I mean, there's been a few companies out there that have reported nice earnings like Amazon and Facebook, but these companies do not trade at cheap valuations. Okay, they're fairly expensive when it comes to a PE ratio. So let's look at what happened. I mean, the NASDAQ was the one that really started kind of leading the whole move, right? I mean, we had some bad earnings out of Microsoft. Well, not bad, but let's just say we had some disappointing earnings out of Microsoft, Intel, uh, uh, Google, um, you know, Apple, right? So Nasdaq really kind of started the dissension, right? And then all of a sudden on Thursday and Friday, we started getting some participation uh, from other sectors. Even we have been watching cybersecurity, right, which broke out a little bit over the trend line and then failed, right, and we've fallen back below that. Let's take a look at the semiconductors. So they really pulled quite a head fake last week. They actually, I was concerned. It was one of the areas that I said maybe stay away from semiconductors and tech. And sure enough, what happened? We had a little bounce. It was kind of interesting, right? We had a bounce on Wednesday, and it looked as though maybe we were going to take out this longer term trend line right here. So, and then come Friday or come Thursday, boom, we had a pretty nice little sell off, and then we had an accelerated sell-off on Friday, okay, with some pretty good volume. So again, the semiconductor and Nasdaq space kind of look like areas that we want to avoid. We talked about last week solar was an area that I was hoping was going to catch some recovery, especially if oil and energy continued to run. I thought maybe that we could get some rotation. We had the Sun Edison thing kind of behind us. Thought maybe we could get a little pop, and we actually did take out this trend line. We did get a little bit of a bounce in there, but then we wound up failing on Thursday and Friday. So Thursday and Friday we had kind of across the board. And let's just go through some sectors. Another area. Okay, so there's the biotech, but let's take a look at the home builders. Home builders had a bit of a pullback on Thursday and Friday, right? Let's see what else we got. Building materials pulled back a little bit. Energy actually pulled back a little bit. Now listen, the energy names have had a tremendous run, right? And the thing is, the fundamentals haven't gotten that much better for the energy sector, right? There's still, I mean, okay, $46 a barrel. That's great. It's above the 44 that Dennis Gartman said he would never see again in his entire lifetime. But it's still not like really profitable, and really nothing has changed in terms of supply. You have Iran jacking up supply. You've got Saudi Arabia saying that they can raise at any time. So, look, it's not like a really super pretty picture for energy. Still a tremendous amount of layoffs being done out there within that sector. And it's not just that sector. And that's what's so concerning. So a lot of these companies, a lot of the earnings that we've received so far, they have been able to beat on the bottom line, or at least match expectations. But the revenue, the top line, has not been strong. What is that an indication of? Well, it means that they're trimming, right? They're trimming. They're cutting CapEx expenditures. They're laying off employees. A lot of layoffs being announced. It's not reflecting in the jobs number. I get that. But if you look at the underlying jobs that are being created, they are actually, not good, high quality jobs. The jobs that are being lost, I would say, are good, high quality jobs. Financials had a little bit of a pullback. Industrials had a little bit of a pullback on some rising volume. We already talked about technology. You started to see a little bit of a bounce in utilities, but they are now, making lower lows and lower highs. We'll see if that continues. Healthcare, which was another area that I was hoping we would see some positive action in, actually had a fairly negative week. It's at a interesting spot for a potential bounce. I think it's worth continuing to watch healthcare, but it is coming up into this short-term trend line. If we break below, it could get ugly. Let's take a look at consumer discretionary. you know, actually it looks like it's somewhat healthy. It almost looks like it's consolidating a little bit. Uh, Held up, I would suggest, better than a lot of the other sectors. Metals and mining, of course, have been on fire, right? But I do have to suggest that it's starting to get a little, kind of a little ridiculous in the mining sector. And we'll go to gold in a minute and gold miners. And actually, I'll let you know that I have a hedge on. I took JDST in anticipation, and I have to put you on hold here. Okay, sorry about that. So, as I was saying, I took some JDST in anticipation of the fact that we might get a pullback in the miners, and it's been a very painful trade. However, I also had some exposure to miners, actual miners, so it really is kind of a hedge against those positions. And I will tell you this: that on Friday, I sold quite a few short-term swings and long-term holds, building some cash in anticipation of a potential pullback. You know, I can always buy the positions back if, you know, my thesis turns out to be wrong. However, I felt as though it was time to err on the side of caution. So, XOP, let's talk about, you know, we've had an excellent run pulling back to a potential bounce area. If this breaks down, we could see it pull all the way back down into the 31 range. Let's take a look at retail. Retail is a big, big concern for me, and we're going to get some retail numbers in the next couple of weeks, and I think that's something that we really want to pay close attention to. Why is this such a big deal to me? Let me back it out to the weekly. So, you know, when I go through my market wrap and sector watch, I go through the daily and the weekly. I like to pay close attention to the dominant long-term trend line. And you can clearly see that the dominant long-term trend line for retail has been in a nice upward slope for quite some time. And what do? We came up and we tested this shorter term trend line right here and failed. We were unable to break through it. And now here we are back testing this long-term trend line. If we break below, I would suggest that that is a concerning development. So let's take a look at transportation, kind of making the same type of move that the retail made, right? So here's our dominant long-term trend line. And we came down and basically kissed that and bounced right off of it, okay? And now we've come back up into this shorter term trend line, found some resistance, and appear to be potentially getting ready to pull back. Let's take a look at this on the daily. Right, we've broken this short-term trend line right here. We consolidated here, looking like we might take out this trend line, and then we've broken down. Now, look, the panic button doesn't need to be hit right now. It doesn't mean that you need to get out of everything completely, but you know, locking in some profits after the tremendous run we've had is not a bad way to go. So let's go take a look at the crazy move in miners, right? So this is JNUG. This is the junior miners, and they have had an explosive, unbelievable run. Okay, the question is, how much longer will this last? Listen, if the dollar continues to fall, it may last for a while longer. I mean, it could go crazy parabolic like DWTI did a while back when oil was continuing to fall, it seemed like, every single day. So, JNUG, let's take a look at actually the gold itself. Gold had a nice little pop, right? Little gap up, and all the miners followed. Let's take a look at GDX, right? It's getting parabolic. Listen, if people have not locked in profits with these kind of moves, you know, or they're just getting in now, I would suggest they're late to the party and they're going to wind up being bag holders because nothing just goes straight up forever. It just doesn't work that way. So this would be an area that you would think people would be locking in profits. You know, I understand that the strength is incredible. It does look that way. It looks like it's going to go straight to the moon, but everything has, at some point does pull back. So tremendous move, uh, un, and maybe it continues. But I would suggest that this would be a time, if it does continue, that you want to start locking in some profits and booking into strength. Let's take a look at. So one of the things that I did do on Friday, and I'm just gonna I'm gonna throw this out here. I could have egg on my face, but I took a position in drip, just a little position, okay, in anticipation that maybe we get a pullback in oil. Just a starter position. I took a position in SPXS, right, in anticipation that maybe we get a pullback in the S&P 500. Let's take a look at the S&P. Let's take a look at the SPY first. Actually, let's look at the S&P 500 first. So here we are. I had some levels of potential areas of support. We broke right through that. Now our next area of potential support, 2041. Below that, basically round number roll test, a round number test at 2000. And if we could crack below that, then we're looking at potentially coming down to 1960 in that range. But let's look at the S&P, the SPY, because here what I did was I did an actual Fibonacci retracement and just go from the lowest point to the highest point. First area of potential support is 203. That's 23.6 pullback. Next one is 2000, right? It's kind of amazing how these line up. Then you get a potential 50% retracement, which is 1960 or 196, and then a 61.8% retracement at 192 or so. So, we are seeing some weakness. We'll see if now that, because the Nasdaq led, we'll see if the S&P and the rest of these follow that lead. Let's take a look at the IYT real quick, which is the transportation. We already looked at it, but let's take a look at the IYT. I like that one a bit better. So, basically we popped over this trend line here. We've pulled back. We've broken through. Now we could potentially come back and test this long-term dominating trend line. Let's go back to the weekly, take a look at that, right? We could come back, potentially test over here. Let me go back to the daily. So we talked about financials. They pulled back. We talked about home builders. We talked about the IBB. There was a lot. There really wasn't any place to go and hide except for gold, right? Towards the last couple of days of the week, there was a lot of breadth in this sell-off, and that is a bit concerning to me. We'll see if that continues in the week coming up. But like I said, the other thing that we want to pay very close attention to, and this is another thing that I did. Real quick, let's talk about T2107, T2108. So this is the percentage of stocks above their 40-day moving average. We have been talking about the fact that it's been up in the nosebleed seats for a while now. And we did get a little bit of a sell-off on Friday. It did recover. We did have a late day bounce. I will suggest that, or mention that. We did have a late day bounce. Things could have closed. We didn't close at the lows of the day, right? So we had a little bit of a bounce. Maybe we get a bounce continuation on Monday. We'll see what happens. But if we continue to break down, as I'm looking at this T2108, what are we doing? We're starting to create some lower lows and lower highs. So that suggests to me that we need to be potentially cautious, right? We've been up in those nosebleed area for a while. It wouldn't be a big shock to see us pull back. T2107, the percentage of stocks above the 200-day moving average. we're not in the nosebleed section yet. I mean, 70, but we're getting close. So wouldn't be a big shocker to see us pull back here. And let's see. Let's go to the other little trade that I did start. TVIX. Okay, I did start a little small position for NTVIX in anticipation that if the markets continue to roll over, we are going to see a rise in volatility. So TVIX and UVXY are both ones that I think you want to put on your radar, especially if we see continuing weakness into next week. Now, we still have earnings, a lot of them ahead of us. Let's see how earnings develop. And I think you want to be much more cautious with your approach to longs as we head into this week. One other thing to point out really quickly, JNK, which is high yield bonds, actually held up fairly well. Look, if all of a sudden you start to see JNK or HYG roll over, that could be a pretty significant sign as well. Okay, that could signal some more weakness ahead for the markets. So there's a lot to be, in my opinion, there's a lot to be concerned about for the upcoming week. Okay, so hopefully you've recognized the same things. You've built some cash. You've got some powder dry, and you're ready to take advantage of whatever direction it is that we head into next week. I will be doing Stocks to Watch live tomorrow, 8 a.m. Vegas time. Join me there. If you got some stocks that you'd like me to check out, email them to me. Tweet them to me, and I will do my best to get them on the list of stocks to watch for next week tomorrow. Speaking of that, stocks to watch, let's take a look at how we performed. Oops. Take a look at how we performed last week with our list of stocks to watch. Now, this really doesn't represent the kind of moves that we saw because a lot of these stocks had some good pops, and then on Thursday and Friday they wound up giving it back. But there were some pretty nice movers. ORIG had a nice move. Seadrill, ATW, HK, CHK, all of these actually had some fairly decent moves throughout the week, and then wound up giving them back. The nice setups that we had in IBB, unfortunately, gave it back. Or had pretty weak moves because of the weakness in the IBB. VSLR actually had a decent move, but then wound up giving it back. So last week's list, there were some good intraday opportunities. There were some good day trading opportunities. But with the markets doing what they're doing now, have to be very cautious with swings. So join me tomorrow, Sunday, 8 a.m. Las Vegas time, ticker TV session, and hopefully we'll have some decent play opportunities for next week. Thanks for watching. Enjoy the rest of your Saturday. For some of you, I'll see you first thing in the morning. For the rest, I'll see y'all next week.